Hi traders, and welcome to my video on the G channel indicator. In this video I'm going to show you how you can use this indicator to help you capture moves like this one for over 700 pips and this one for over 550 pips and counting. Okay, so you can see the G channel indicator on my chart here. It's basically these lines which are displayed as green, blue and red. You can customize the colors, okay, from the indicator settings. Also the inputs, which are the period and the price used. I'm just using the 60 periods here, which is basically the last 60 bars for the calculation. I got the indicator free online. Just search for G channel indicator and your trading platform and you should be able to find it. Okay, this is I'm using the MT4 trading platform and this is a pound dollar 1 hour chart. I prefer the 1 hour charts and above simply because they contain more price data and therefore I find signals tend to be more reliable, not just on the G channel indicator, but on technical indicators in general and most certainly for support, resistance, trend lines, price action, candlestick patterns, so on and so forth. Okay, I don't see the need to stress yourselves out trying to trade the 1 minute and 5 minute charts all day long when you can capture big moves like this for hundreds of pips. Okay, by just spending less time chart watching and getting, as I said from my experience, more reliable signals. Okay, so the premise of this indicator is basically we're trend trading, okay, and we're going to look to enter trends on a pullback. That's how I use it. I like to trade with the trend. Okay, I'm not going to be selling in an uptrend or buying in a downtrend. Okay, you can, you can trade range bound strategies if you want. I just prefer, as I say, the trend is your friend. Okay, don't see why we would trade against the tide. Okay, this you can use this indicator and the strategy for Forex, crypto, stocks, commodities, indices, bonds, etc. Whatever you like to trade. So let's get into it. Okay, so the way in which I interpret this indicator is basically for all the lines to be aligned correctly. Okay, so for an uptrend, I want the green one here, blue one in the middle, and the red above. Okay, once that's been established, what I'm going to do is I'm not just going to jump in at the end of a downtrend like this or anything. I'm going to wait for the start of a new trend. So we see this move play out. We could have perhaps been trading it. And then once we see the market stall around here, draw a level of support and then wait for the market to start making these higher lows. Okay, and then we know we're in an uptrend. This is when the indicator, you can see clearly, is pointing upwards again, all of the lines. Okay, just as on the downtrend, they're all pointing in a downwards direction. So we're going to wait for all the indicators to align upwards. As you can see from my drew my own trend line on the higher lows there, you don't necessarily need an indicator to tell you which direction the market's going, but I will clarify that throughout this video and you'll see what I mean. But we'll start with the indicator to begin with, okay? So once we have this trend forming, we can just look to enter, okay? We're going to trade long only or place a buy trade because we know we're in an uptrend. We're not going to sell. And then we're going to wait for a pullback. So a pullback is basically after there's been a move upwards like this one. We're going to wait for price to pull back towards the blue line, okay, which will act as support, as you can see here. Price bounces off of this blue line here. And then we're going to wait for the red line to turn, well, for price to be in this channel, and then for the red line to turn upwards and enter on a breakout as we could there. Okay, so we can draw a resistance and we can enter on a breakout into the trend, whether we want to enter there or we want to draw a more traditional resistance level there. Okay, tested, breakout, resistance becomes support here. I'll just zoom in to show you. Okay, so we had this resistance level here. Nice pullback into the channel is what we're looking for. Arguably as back as early as this, we had a pullback there. You could have traded on that breakout there. Even here, this resistance breakout, resistance becomes support, price continues upwards. So you can see there's ample opportunities. Once this trend has formed, okay, you want to wait at least for 1 or 2 mini rallies. Once the trend is formed, you can wait for a pullback into the channel and then enter on a breakout in the direction of the trend. Okay, so breakout there, Breakout here again, resistance becomes support, price continues upwards. Price pulls back to the channel here. So what do? We can trade on a breakout there to the upside, pull back to the channel here. Okay. And again, draw resistance, nice big candle. No coincidence you see these big candles around the resistance simply because traders are waiting for these breakouts. You see there, you know, big candle breakout, big candle breakout. Not so big here, but probably after this consolidation, it still was a bigger candle, and then you eventually get your big breakout here, big breakout there. Okay, price pullback to the channel again. This is slightly more of a pullback. Draw your resistance, breakout, resistance becomes support, price continues upwards. And we could have done this all the way up this trend. Okay, price is a bit far away here. You don't want the lines to be too wide apart because then you might risk buying at the high. That being said, there's still a little bit of gas left in the tank to capture some of this move upwards. If we just zoom out, and you can see big uptrend. We knew from down here where the market was going. We knew it was making high lows. We were in uptrend territory. We just needed to time our entry and jump on the train and or the bus and just ride it to the very top. And then once you see the market at the top start to make these lower highs, you can just exit part or all of your position. Perhaps even around this consolidation here, we would have done that. But had you taken the first pullback into the channel and the breakout above around here, we could have placed our stop loss below the recent low, which is just here. Okay, so what we're looking at, maybe around a 20 pip stop loss, which is relatively tight for the 1 hour chart time frame, especially when you consider this breakout potential of almost 500 pips with a 20 pip stop loss is fantastic. That way, you know, if our stop loss is between 15 and 25 pips, then an average of 20. Even if we take 3, even 4 losses and we're down 80 pips, we know that eventually when we do capture this big trend, which you will with good timed entries, we'll make back those pips and then a lot more on top. We can maximize moves by using a trailing stop. So say we're getting on this breakout here. Okay, after there's been a significant pullback and continuation, we can just move our stop loss below the lows, below the lows, below the lows, below the low, below the low, below the low, below the low, below the low. And that way we can ride the move as much as possible just to maximize profit if the trend does turn around against us. What we don't want to do is leave our stop loss down here somewhere and miss out on all that profit potential. You can even close part of the position on the way up if you wish. What I wouldn't want to do is panic, get excited around here and see, I don't know, let's say 60 pips around here. Say, oh, well, we had a 20 pip stop loss. That's 3-to-1 risk to reward ratio. Fantastic. Let's take the pips off the table and exit a trade prematurely because you're just leaving too much on the table. Of course, you can re-enter. As you can see, there's ample opportunities to re-enter on this move up here. The only problem is the more you re-enter into the trend, the more chance you run a risk of being wrong and you know, getting in too late or in an unfavorable position. So ideally we want to be in around the start here and just maximize the move as much as possible. Also, when you re-enter, of course, you've got to pay broker fees, spreads, commission, etc. each time. Okay, I did see this one as well. Nice. Resistance, resistance, and look at that big breakout there. No coincidence here. Price pulled back to the channel. Okay, the G channel, and then a big breakout to the upside. So, you know, you don't necessarily need this indicator to see that, but I think it does a good it's one of my preferred indicators. I'd say if I was forced to use an indicator to help trend trade, this would be one of them. Simply because it just, I like the way how it visually shows you when price is back in the channel. You know, granted, you can just use your eyeballs and just wait for a pullback. The most important thing is knowing which direction the trend is going, like in an uptrend here, timing your entry on a pullback and a breakout, and having good money management. Don't let fear and emotions get in your way. You don't want to revenge trade or you know, be greedy. You know, fear of missing out, forced trades that aren't there. You certainly don't want to buy at the high and sell at the low. Talking of selling then, so we can go to this current sell situation that we're in here. So same principle applies. We may have been riding this uptrend here, so that's fantastic. We could have traded that. Once we get to this point, we can see the market making his lower highs. Okay, we can see that this trend here is run its course. This support level, ample opportunities on the pullback and the breakout, as you can see, entering up in this trend. If we just applied the same principle, you know, you had your pullback in the channel here, breakout there. Okay, pullback here. Probably I would personally be looking after all this consolidation to trade that breakout there. Okay, pullback around here, nice breakout, slightly choppy action, not ideal, but after this pullback here again, breakout there. Okay, so that's how we could have used the indicator to help us with that trend. And then in the sell trend, we do the exact same thing. To identify the sell trend, as I said, the lower highs, breach of this support level to the downside. And if we zoom in, we can also see got a triple top formation there, which is when there's a resistance point that's being touched at least 3 times. We can expect the market to perhaps turn to the downside. Got our neckline, which is basically the support within the triple top there. Okay. And then after this breakout there, you can see from that big candle, see that big candle there? That big candle down there is a breakout of this trend line, which was the first sign. Well, the second after these lower highs here, and the third as well if you take into consideration the bearish candlestick patterns. I do have loads of videos on candlestick patterns and various price action formations you should check out. It's good to be aware of them. There's a reason they've been around for almost as long as the markets have existed. Okay, and then can see here, as I said, we've got 3 inside down candlestick pattern there as a very bearish signal. You've got 2 of them, in fact. So bullish candle followed by a bearish candle, which is 50% of the bullish candle's body, and another bearish candle that breaks below the low of the initial bullish candle. So that happened consecutively, happened there. So bullish, bearish, bearish, bullish, bearish, bearish. Very strong support here, very strong bearish action. We were primed with, as I said, the market making these lower highs. We were playing wedge pattern there as well. We were primed for a breakout. Lots of traders were watching it, and happy days we had that breakout. Had we had taken that initial entry there, we would be very happy with our position. Currently up over 550 pips. And again, stop loss this time above the recent high. So around here somewhere, 20 odd pips. I mean, again, really good risk to reward ratio. And we could have used a trailing stop on the way down. So when price dropped here, made this pullback and then continued, we could have moved our stop loss above this high here. And then just above this high here and above this high all the way down, just trailing as much as possible. Okay, there is a chance that if our trailing stop had made it as far as here, we may have been taken out when price turned around. But then you can see it's quite a choppy, uncertain market for the continuation of this downtrend here. Okay, and still plenty of pips on the table. You can close part of the position on the way down as well. Okay, so remember what we did for the uptrend, we'll do for the downtrend now. We'll wait for a pullback into the channel. So we get a pullback into the channel there, draw a support level, big breakout to the downside there, no coincidence. And pretty simple strategy, really. Find your trend, wait for a pullback. Don't sell. You don't sell after a move like this. You don't sell after a move like that. You wait for a pullback. And some traders would sell at the top of the pullback, or they just wait for the breakout. Okay. Again, same situation here. Pullback, so we had an M pattern there as well. M pattern here, breakout. This is an NFP, non-farms payroll, first Friday of the month candle. This big move down here, so we could have rode the momentum on that. Applied the same principles. Pullback again. Interestingly, you'll often see a support level like this will hold, but once it's breached it can then become resistance, okay? And there's just a few different pullback into the channel again, breakout to the downside, big breakout candle. Okay. You'll often see that loads of traders are watching these levels, especially on the higher chart time frames, and they tend to have a self-fulfilling prophecy, and you know, we've got the pullback again there, draw support and a big breakout to the downside. Ample opportunity to enter on this trade. Support there, breakout, support becomes resistance, continuation. There was ample opportunity to enter on this downtrend, although ideally we would have liked to have got in as early as possible, and the G channel indicator could have helped you to spot the pullbacks to time your entry into the trend. Most importantly, you would need good money management. You know, as I said, I like to cut losing trades short and let winning trades run just to maximize the good news when we do eventually catch them. Okay, so in fact, you could argue there's one player now at the moment. Okay, we've got this. We've got the lower highs. They're in play here. Okay, the G channel is facing downwards. We've had our initial breakdown here. We've got a nice M pattern there and a breakout. So we could have entered on this pullback in this breakout around here. You can see then the support levels become resistance. This would have been a nice timed entry into this particular trend downwards here. And if you missed the first bust, it doesn't matter. There's another little pullback here and another opportunity to jump on there, but you do need to be wary of where we are. Okay, in terms of this support level, so it'll be interesting to see how this plays out. But again, pull back into the channel, breakout trade into the trend direction. Okay, hopefully that's all clear. If you have any questions, please do let me know. Make sure you practice on demo accounts to begin with, and as I said, try to make life a bit easier by looking at the higher time frames. Do thank you for watching. Please like and subscribe for more, and I hope to catch you on the next one. Take care.